Hello, my name is David Wolfin. I'm President and CEO of Avino Silver and Gold Mines Limited. We're a junior primary silver producer, and we have a clear path to transformational growth. It's clear because we own the assets going to drive our growth to intermediate status within 5 years. We're going to go from one producing asset to 3.
David, good to see you here, sir. What a week. The sun is shining literally, and it's also shining on the space, isn't it?
Yeah.
Precious metals, top of the agenda. So look, we're obviously here down in Colorado Springs. You've been having lots of meetings. We're at the end of the show, thankfully. Have you had a good time?
Fantastic. We didn't miss one meeting. Everyone showed up, and it was very busy.
Very, very busy. And it's also, you're finding sort of different types of money coming in here. Have you sort of noticed that?
Oh, sure. Because our market cap has grown substantially, about 700% over a 3-year average. So we're, the bigger banks are now taking a look at us.
Right. Yeah. You're hitting that sort of profile for them for sure. But let's kind of get into, for people new to the story, let's kind of get into what the kind of 2 core assets and where you are with each of those. So Avino Mine, obviously, that's the cornerstone for now.
The cornerstone. So it's producing between 2.5 to 2.8 million ounces of silver equivalent on an annual basis. La Preciosa we acquired from Coeur Mining in 2022. And we got the permit in Q1 this year, and we started blasting in April, and we've intersected the veins already. So we're going to see a contribution in our mill this year. And the third asset is the oxide tailings. So we spread them out so we don't overwhelm our team when we're building the 3 assets.
Yeah. Okay. So maybe just talk about some of the things that you've also been doing on the balance sheet. Obviously, you got rid of royalty on.
Yeah. Well, we're doing the opposite of our peers. We're unlevering, unhedging, and buying back the royalty, which is unheard of.
Yeah.
So the royalty on La Preciosa, Coeur had it when we bought La Preciosa from them. They sold it to a company called Trident out of the UK, and they were bought by Deterra in Australia, which is a base metal royalty company, and so they didn't want it, so we bought it back. How often does a mining company get to extinguish a royalty?
Yeah, 100%.
So blue sky for our shareholders.
Yeah,
I happen to be the largest shareholder, so I've always learned, align yourself with the shareholders and do what's right for them.
Yeah. This time we mean it.
Yes.
This time we mean it.
Yes.
No, that's fantastic. So, but you're 100% owner of both assets, royalty free. That's good
There's
news.
some royalties on some areas of Avino, but not at La Preciosa. That's gone.
Got it.
And that's the high-grade mine that we're building right now.
Okay. So obviously, silver price is doing a turn for everyone at the moment, but you've got to take advantage of that by taking care of business, which is operationally. Can you talk through, what you're up to at Avino Mine?
Yeah, it's making money. We did 21.8 million in revenue for Q2. There was 10 million in operating income, 4.4 million in free cash flow. Yeah. Our all-in sustaining costs are $20.93.
Right.
But when we bring La Preciosa and start feeding it into the mill, it's going to lower our all-in sustaining costs because it's higher grade and economies of scale. And then the third asset is even cheaper. So if you combine all 3 ASICs, we want to get between mid-teens to low teens in our all-in sustaining costs.
Right, and in the current environment, that means a lot.
Cha-ching.
Cha-ching, high margin.
That's why our stock's been performing so well, Pete. There's 3 darlings that got taken out. Mag, Silvercrest, and Gatos. They all had high-grade mines. We're the next one on the list.
Like I say, not many, even coming behind you, quite frankly.
No.
So,
there's big deposits out there, but they don't have the infrastructure. How are they going to monetize it? It's going to take a while to build it out. We've got the infrastructure.
Right, okay. Now, people will be talking about, well, what do we do next? Because clearly a growth story, La Preciosa has been built out, and when that starts feeding into the mill, that's going to be great news. But do you feel like the best use of the money that you're making now is to kind of plow that back into the operations, into the development, rather than anything else?
Under 43-101 standards, we're now, we qualify as operating issuer, so we can publish reserves. Right. Otherwise, you need a feasibility study. That was done in 1968. So We are drilling. We've got 3 drills. We're drill baby drill, and we're going to come out with reserves in Q1, but we're also going to reimagine our growth strategy. We're looking at going from 8 to 10 million ounces,
Right.
but that was an internal plan done prior to the rally. Now we got 50 million in the bank and we're debt free, so we're going to bring in an outside engineering firm to see maybe we should go bigger, 12 to 15 million ounces.
Right.
So we can grow our own operation. We don't have to look outside the company.
So organic growth is the best growth for you. It's the cheapest
Keep
ounces,
our
best
overhead
return.
down.
Right.
It's one management team. You start buying other mines, then you need more middle management. We don't. We're lean. Look at our cost per ton, or our cost per ounce is $20.93. Cost per ton is $73. We're a low cost mining operator.
Interesting. Well, I also, there's probably not too much to choose from out there in terms of acquisitions, right?
No, they all need money and help if they're available. We just want to focus on what we got because we control our own destiny.
Right. So in terms of like the next 12 months, if you're laying that out, what's the kind of priority order?
Well, it's drilling. You'll see contribution from La Preciosa. So the resource grade that we used in the mine plan is 200 grams. That was drilled out by Pan American Silver and Coeur for an open pit mine. So there's a lot of dilution in there.
Yeah.
Recently, we put out drill results, 7.9 meters of 1,600 grams of silver equivalent. So we're showing the market it's going to be higher than 200 grams.
Yeah.
So when that starts reporting to the mill, going to lower our costs, increase our margins.
This is meant to be a long interview. There's no point. There's no point. You're
Hang
delivering.
on, I got more to tell you.
Come on then.
So last week I got to ring the bell on the Toronto Stock Exchange.
yes.
So we got included in the TSX 30. That was the top performing companies on the exchange in every sector. So Celestica was one, Lundin Gold number 2, 2 companies I'd never heard of,
Right.
Energy or Pipeline, and then us, we were 5th. So we were up 600%.
And indices as well.
So yesterday we announced we got included in the GDXJ. That happens on Friday. So think of the liquidity. We're trading anywhere from 6 to 8 million shares a day on the NYSE American.
You're excited. Everyone should be excited.
Thank you.
Keep doing it.
Yes.
Keep doing it. It's fantastic to see you here, but it's been great watching you go through that ride since we met back in March. I mean, what a difference.
Yeah, and we're fairly valued right now. Our PNAV is around 1. So there's a lot more room to grow. MAG got taken out at 2.2. So we got to deliver a higher grade to the mill and we'll get a premium in our stock. So there's still upside.
Good man, David. Thank you.
Thank you.
Cheers.
Cheers.